Hi, everybody. Welcome. I'm so happy to see so many people and like so many new faces that I haven't met before and people that I already know. So a little bit about myself. My name is Magnifique. For those of you who don't know me, I've been in real estate now for about 5 years. I love it. I would never do anything else. And I feel like we kind of put these events together for the community because there's a lot of people who are coming from other countries, from other states, that want to build wealth, that want to invest in real estate, but they don't know the tools, they don't know the steps, they don't have the education or the opportunities to learn how to do it. So I really try a lot, me and Didier, to involve the community, to put these events together, to invite people out so that they can have a real chance to build generational wealth. Because sometimes you don't know. Sometimes you don't know the process to even buy the first home. Sometimes after you've bought the first home and you're living in it, you don't know the process to maybe if you want to be an investor. You don't know the process if the lending on the second home is the same as the first home. So we want to make sure that everybody has the opportunity and the education that we have. So just because I'm in real estate and I'm building wealth and I'm doing something, I want other people to have the same chance, right? The same as everybody on this panel now, they want to be able to educate the community. They want to be able to be out there so everybody has the same opportunities. So I've brought you these wonderful, wonderful gentlemen to help you and educate you on some things that maybe you didn't know, maybe some things that you have been learning but you don't understand clearly. So I think I'm gonna let them introduce themselves and kind of tell you a little bit about themselves, and then we can go from there, right?
Hello, everyone. My name is Mike Rock. I'm with the Corey Scott team, so we're a traditional mortgage lender. Personally, I am also a real estate investor, so I've fixed and flipped, I have some rentals, I've learned a lot, I've made a lot of mistakes, and my goal is just to share whatever I can. I think that real estate is one of the best ways to build wealth. I think it's an incredible way to build a foundation to buy the most important thing, and that's time. And so it all starts with the first one. So I'll do whatever I can to help share information, to help buy the first one, and then share ideas on how to leverage. I've leveraged a lot to buy the second, third, and fourth one.
Awesome. My name is John. Some people know me as a pastor, and some people know me as an investor. But as of now, I just go by John. And I've been so blessed to be in the business of real estate. This marks my 8th year in the business. It's been a long time coming, I can say that. I started out wholesaling for the first 3 years, and then got really heavy into fixing and flipping. So now I do mostly fix and flip, creative finance, meaning buying homes without your own money, or even using the banks. So there's that aspect of real estate that I do. And then my main business now is just buying properties for fix and flips and holding them for rentals and cash. Am I holding it on?
I think it's on. It's on.
All right, it's back.
All right. Speaker. Yeah. I think you have to hold this one too.
Okay.
Yeah.
All right. So it's been a blessing for me. It's given me a lifestyle that I enjoy. In terms of ministry, I mean, we all want to do good in life, and we want to do this business for. I don't know what your reason is for being here, but for me, it was to be financially free. And over time, I think it's my 3rd year that I walked away from my traditional job and started doing this full time. And now I'm also able to do this for ministry. I literally have this beautiful lifestyle that God has blessed me with. I don't need to show up to work. I make my own schedule. I wake up when I want to. But it's not that I do that. I mean, I still work very hard in my business, but I have that lifestyle. If I want to travel a country, I can do that without having a boss over my head. And that was the lifestyle that I really wanted. And me I've been an entrepreneur for many, many years, pursuing other businesses, but real estate is the vehicle that I found that really worked for me. I know my introduction is a little long, but it's been a blessing. And so thank you for being here.
Yeah, thank you, John, Mike, and Magnifique. My name is Didier. Most of you probably know me. I'm a CPA. I'm an accountant. CPA can mean many things, but I'm an accountant and mostly helping people in terms of taxes, how we can leverage even taxes to help ourselves become financially independent. So I've been doing this in terms of sharing the knowledge that I have, just similar to other folks who are here. And as Magnifique said, that we always try to help our communities by sharing the knowledge that we have to be able for them also to become financially independent. So I'm here again. It's an opportunity for us to share with you and not only give our knowledge back to you, but also hear from you. Because most of the time that the things that have been helping me over time is to get research and learn based on the questions that people are asking. So this is another opportunity, and I want to just thank Magnifique for giving us this time to share again, because she said that we've been working together, trying to bring people together all the time, but I've given up. But she's more patient.
Thank you.
So thank you.
Thank you.
You can just keep it.
Yeah, I think this one is having some problems. But I think you guys can hear me. I'm loud enough, right? So good thing. Okay. So we really wanted, or I wanted when I was organizing the event, for this to be more community focused and a discussion, and not something where I'm here and I'm presenting something to you and I'm talking for 1 hour and maybe some people don't understand and some people understand and you don't get your questions answered, right? So I want to be able to give you guys the opportunity to kind of open up and tell us a little about maybe your experience in real estate, what you were looking for when you came to the event, kind of any questions that you would have on the lending side, if you've bought before, if you're looking to buy, questions that all these experts here can bring you the knowledge of, you know? So like on my end, I've bought before, I've been a landlord before, I've sold before, I've helped clients do all of the above. So in my 5 years of experience, I'm still new. That's a baby in real estate. Most of the people I work with are like 20, 25 years, 30 years, 40 years experience. And I'll listen. That's why I always tell my kids, you have 2 ears and 1 mouth for a reason. You have 2 ears to listen and 1 mouth because you have to listen double before you speak, right? Listen and then speak. So I want to be able to give you guys the opportunity. Why did you come here? What are you looking for? What kind of knowledge are you looking to gain? And then I'll give the guys, the floor to kind of answer any questions that you guys might have, So more of a discussion than us being up here and talking for 1 hour about nothing that maybe you don't care about. So like Rita, for example, up here up front, let me call her out. She knew I was going to call her out. So Rita is a client of mine who we are now in the process of buying her first investment property. And she has been a machine for everything that she doesn't know. Have I ever not answered any of your calls or texts? 9 o'clock at night, 10 o'clock at night, 1 a.m. If she's stressing, I'm stressing. So my job as your realtor or your representative is kind of like when you hire a lawyer, right? You expect me to have the knowledge that you don't have through the process. So I feel like in the process that we've been in, Rita has gained so much knowledge. I told her, I was like, I'm waiting for you to get your real estate license. So we'll be working together next year because she asks questions. And even if I don't have the answer to the questions, I have all kinds of people with a lot more experience than I do that have the answers, and I'll reach out to them. I'll figure it out no matter what, right? Because I'm here to represent your best interests, right? So I know a few of you are clients of mine. And we've worked together, and I know you have some knowledge, but I'm always open. I want you guys to be able to, call us, have our numbers, have the experience. Whatever you need from us, we want to be able to give to you, right? So I just want to open up the floor if anyone has any questions or reasons that they came or something that they wanted to learn or gain from the experience. I know you're all shy. I know you're all shy. You can't all be like me. I know. It's okay. It's okay. There you go, Mama.
So my experience has been minor. For one, I think the biggest thing is you're gonna be client is just knowing who to choose. You want to choose somebody who's motivated, not just a friend. Some people are just you for real estate, and that doesn't mean that just because you're related to them or you're friends with them.
This one gives you this.
But
That's her.
how driven they are and how much they're offering and how much they're putting in.
Is it the same?
So that was my first intro and how I'm like, even my spirit drove me to Magnifique. It was more so like, I feel like she'll understand you. So you really have to feel it out because you're going to be working with this person for like 2 to 3 months, 4 months, 6 months. So you really have to build that relationship. Mm-hmm. Is this person someone that's going to answer the call? If I'm not talking to my loan officer or I don't have that relationship with my loan officer because she's the first person I'm speaking to personally. Am I able to get the answer from her or can she get it from my loan officer? So you just want to get that relationship. Again, this process has been exhausting. I'll tell you the truth. It's not easy. I think many of us are just used to, okay, we got an offer. We're going to look for the house. It's going to take us a month or even, I think personally, I thought it was going to take me like maybe 2-3 weeks. But it's taken me longer because, again, we live in Maine. Most of Maine houses are like years 1920. You're not going to get anything 2025. So they're old houses. We don't live in Texas where the houses are new. So we have to keep that in mind where I'm like, okay, I can't be as picky. The basement is not going to be the best. The ceiling is not going to be the best. But at the same time, I also have to learn to be patient and not rush. And she was good at keeping me calm because I do want to sign the dotted line. I do want to close, but I also want to keep in mind that, hey, this is something for 30 plus years. This is something that even if it's a rental property, I also have to put myself in that person's shoes. I also have to consider, okay, what if these tenants are not there? Am I comfortable enough to live in that house? Well, that's how I looked at it. That's what made me choose the house that I chose. So personally, towards the end, I'm hoping to, get into real estate, hopefully. Thank you to my, my amazing agent. Okay. And then I'm hoping to learn more because it's a lot. It's a bigger umbrella than what it seems, and it's a lot of knowledge. It's nothing to rush. I'm hoping after I close, that maybe in a year, I'll move on and, have more property. So thank you.
Yeah, thank you, Rita. Thank you. Yeah, go ahead.
I'll be the next. Thank you. Thank you very much for the initiative you took to help the members to understand that well. Mm-hmm. I know it's kind of a complicated process, and then especially for those who was not born in America.
Yeah.
So, but each one has their own experience.
Yeah.
So thank you. Mine is about I'm lucky as well. I've met somebody who connected me to lenders. So I buy land and then builders. So the first question is about are you connected as well to lenders or builders as well? Awesome. That's awesome. Thank you. That's how I'm done more than happy than meeting you guys. So the quick question is about for those who was have houses already. Is it the advice you can give when it's a good time to purchase a second one? And another question is about we are community members. Is it also possible to say, okay, I have one for 5 years old or 10 years in experience for having my own house already? Is it possible to say, okay, we can have like 10,000 each one, and then with 20 people, we can buy land and then build is that beneficial for the community or what advice can you give to people? Thank you.
I think I wanna understand the question clearly before these guys step
Thank you.
in. But what you're asking is, after you've already bought a house now,
Yes.
is it beneficial to then find land with multiple people
Yes.
and then kind of go the process? And find
Let's
a
say we are
build-
3 or 5, 10 people to put them together, and then creating, it's kind of having a strong community financially. Thank
And
you.
You're talking about building one house together, building multiple homes together.
Multiple.
Multiple homes.
Yeah.
Okay, like a subdivision. You're saying.
Let's say like Avesta,
Yeah.
in a new future.
Okay.
Thank you.
I take this one first.
I think that it's a great opportunity. My best advice on something like that is make sure you know and trust the people you're about to work with, because things happen throughout the real estate process that no one's expecting. For example, if you buy a property and you open a wall and you find mold, or you find something else, and it's happened to me lots of times. How do you handle those situations? And money makes people do funny things. And the opportunity to lose money makes people do funny things too. So that would be my advice, just from personal experience. Just be mindful of who you're talk about. Have those open conversations, because in real estate, it usually will go longer than you expect, and it usually will cost more than you think. So what does that look like? If you find those people, I think those are the diamonds. Those are the great people, because with a vision, more people can do many things, and it can be great. There's a lot of opportunities, whether to buy, fix, and flip, which John can talk to a lot, which I'll let him take that one, or new construction, which is a totally different animal in itself. But that would be my best advice for that.
I think on the community side of it, I think Didier can speak to that because he's been in the situation before. So maybe you can give a little advice on.
Yeah, I was going just to add to what Mike said, which is how you structure it. It's very important, because I've seen some people come together up to 10 without properly structuring it, and in the middle of the process, one or two want to walk away, and it becomes an issue because there was nothing written in terms of provisions how it's going to work. And I think also, in addition to that, it's very important to well structure it, because the lender, from the lender perspective, if you're going to leverage some money from the lender, to know who's going to guarantee the loan. So that's another piece, because when we are more than one person, and probably you come together, you put 10 together, but you need $100,000, and only one person is willing to guarantee, others don't want to guarantee, or they don't actually meet the requirement from the lender to guarantee, you might probably not getting the loan. So that's one other thing that I'll add, is just properly structure it, making sure you have everything in place, and talk to the lender before you go to the next step of starting actually looking for a property.
Absolutely. I don't have much to add to that, but I can say this, that it's a marriage. I mean, this is the plain way to say it. It's marriage, Is this somebody that you would be happy to be with them for, depending on how long is the process. If I'm doing a project for 6 months, okay, I can deal with somebody for 6 months. It's okay. Am I building it for, is it gonna be a lifetime? Or how soon does that partner want to withdraw his money and put it towards something else? So again, it goes to the agreement, and also just making sure that you're all on the same page. So that's all I can really add to it. Thank you.
I have a question. How many of you in this room have already bought a house before? I know some of you are not putting your hands, but I know you own properties. It's okay. It's okay. It's okay. Be shy. It's okay. Yeah. How many of you have bought investment properties? Okay, some of you maybe. Okay, how many of you are interested, when you came to this event, your main goal was to invest? You want to buy an investment property, or you want to invest in something like that? Okay, that's very good to know. How many of you in the process that haven't bought a house, that want to invest, how far in the process have you gone? Have you gone through lending? Have you talked to realtors? Have you done your research? None of you?
This could be a good question to walk through.
Yeah.
If
The process.
if I'm new
Mm-hmm.
and I'm thinking about buying a property, my first property,
Mm-hmm.
where should I start? Should I go to the realtor? Should I go to the bank first?
Yes.
Where should I start?
Yeah. That's a really good question because I get a lot of people that will call me and say, okay, Magnifique, I have $50,000. I want to buy a house. Okay, are you pre-approved? Then they'll say, what does that mean? You know, what is this pre-approved? Okay, so first, do you have a lender or a bank that you bank with that you trust? Because I have my lenders that I work with, but I want you to be comfortable. So I can work with anybody. I don't care who you are. I'm pretty good about working with anybody. But so the first step usually is find a trusted person. If you don't have a bank that you trust or a lender that you trust that you already worked with or that you want to work with, you can go straight to the realtor and we'll give you recommendations. We can't tell you, like, I can't be like, well, Mike is my best friend, so you have to use Mike if you use me. But I can give you the insight to go through the process. I can help you through the application, especially with English being a lot of people's second language, right? It can be so complicated, even for me, whose English is number one. It can be so complicated in the real estate aspect of things to look through a mortgage application. I have another lender that I work with, and he always tells me, he'll call me and he'll say, so I sent the application to your client 4 times. And what they've done is instead of filling out the application, they requested my information. So they did like the first part of it, where it's just requesting them. So it's like, it just keeps pinging back to me that they're requesting and they're telling me they already filled out the application. So that process can be difficult, and don't be shy about it. Because if I'm telling you that somebody who knows English, somebody who's born here and raised here, is complicated for them. So ask your questions, you know? Don't feel like I'm ashamed because I don't know how to do this or this. That's the whole reason that we bring these events together, so that we can help you through the process, you know? We can talk you through everything. I filled out a lot of applications for people that were not me or related to me, but I'm helping you through the process because that's my job, is to represent you in your best interest, right? So what do you think on your side of things when the process comes in?
I agree. I think lending is probably the first spot, or the 1A, 1B, I mean, you know, talk to a realtor, talk to a lender, talk to a couple lenders. If you're looking to invest, see if that lender has invested themselves, because it is easy to be a lender and just help someone buy a first home, but having the mindset to gone through the process, understanding different ways to leverage, understanding different ways to structure deals. If that lender has not done that before, talk to a couple and work with who you feel comfortable with. I think that's incredibly important. I'm gonna pass it
What do
down.
you think, John?
You know what? I may add something, but it may not be the traditional.
Yeah.
It's not a traditional because I'm focusing on investor side of things. My first home was seller financed. What does that mean? I mean, I didn't go through the bank. I didn't have to get loans. So mine is totally different. And it's not everybody that can just get into that. So that's optional. My brother and I bought another home recently, 4 units, also seller finance. No, it was a subject to. My brother is back there. He's also an investor. So we bought a property subject to, meaning we didn't go to the bank. We assumed the loan. We took over the mortgage. Totally different stuff. We just had to basically do a little bit of work to fix it up. We just bought a church, seller finance. So mine is always, I'm looking at things from investor point of view. And if there's an opportunity to also buy FHA using your opportunities like that, these are the guys to also do it, because the opportunities are all there. So that's what I can say. You can always buy real estate in a lot of different ways, but find out which one will work for you. Thank you.
Yeah, that's very interesting, and I think it brings back to the topic. Probably if you can ask questions to the panel to talk more about, because I've heard from the community questions. I have nothing. I have no money. Can I buy a property? Which is interesting from what you're saying. If you have seller financing, that means you probably don't need to come up with any cash, right? So is that possible? Some people didn't know about it. So, and that's an option that exists there. Of course, it's not as easy as we say, but it's a possibility that is there. So, and if someone, we goes again with Mike, someone say, well, I only have $50,000 or maybe $20,000, but I'm looking to purchase a home that's cost $500,000. This is my first home that I'm going to purchase. I have a stable job, but that's all I have as a down payment. Can I still move forward, or I still have to build more cash to get to the point where the lender can approve me? Mike, do you want to answer?
Yeah. It's a very hard answer. Maybe is the best answer. Generally speaking, you always get your best rates and terms if you occupy the property, if you own or occupy the property. So a strategy I wish I knew 20 years ago would be to buy a property, possibly a multi-unit, live in it, you get your best rate, keep it. You can now leverage that because by then you've built equity. So the property value has appreciated. Move into the next property. You can now you still get your owner occupier rates, and now you have an investment property. This takes time. And I think the important piece of that is that it's not easy to do that in that strategy, to do it over a 6-month period. But if you're looking long-term and you're looking, here's what I can do over a 10-year period, you can look back and have 4 or 5 rental properties. And that adds up very quickly. So I think strategy on how to finance the deal is a very key piece. I see a lot of people going out and looking at properties and wanting to buy them, but not knowing how to finance them and purchase them. I think understanding the finance piece first, so you can go out and be ready to go. Because right now, Magnifique can speak to it. If a property is priced correctly, it is going to sell. Or if a property needs a little work, and investors are hungry right now. So getting yourself in the best position, whatever your goals are, and it could be buy your first property, it could be buy your 10th. That there's different ways to use strategy and structure and be able to purchase a property, but being prepared is key.
Thank you, Mike. John, can you talk a little bit maybe about the wholesaling aspect of things? Because I feel like even me, sometimes it's these words come up and people will nod their heads, but they don't really understand what it is. So I know that you have experience in that. If maybe you can share that.
Sure. I think wholesaling it's a great concept. It's a very simple process, concept that I think if you understand it, you'll see that it's almost the best way to get started in real estate. Wholesaling, it's a simple answer. Wholesaling, it's simply just like how you go to BJ. Wholesaling is BJ and Walmart. You see how you go buy things, even in our stores today, somebody can go and buy a pack of water for how much? Maybe $7 and sell it individually. That's wholesaling, right? So BJ is a wholesale company, right? So let's bring this to real estate now. I spoke earlier about how you can buy properties, seller finance, and all of that. It's when you get into wholesaling, you become a marketer. You add value to the community by finding off-market deals. Whether you're driving around for $1, you're driving around looking for ugly houses that you can get under contract. So wholesale in simple terms is finding a property, discounted property, getting it under contract for a price. Let's say, for example, I get a property under contract for $130. But I know the property is maybe valued at $300,000 when it's all repaired and when you have the CMA or after repair value. So you would say, why would somebody sell me a property for $130 if it's worth $300,000? Well, because it needs a lot of work, right? And so this is where wholesaler comes in, is that you can get a property under contract for that $130 that I told you and sell it to somebody else who's looking for a deal, and they would even take it for $150. And you, as the middle person, let's say, for example, let's share this. I'm the seller, Mike is the wholesaler, and you are the buyer, the investor, right? So I sell to Mike. We make an agreement.
History, right? I could just have started building my credit score and it's down only because of that factor. So is that put into consideration, or are you just looking at the score and it's a hard stop?
just looking at the score.
Okay.
But if that's the case, we can give you some suggestions to build it very quickly. So one of the best, another cheat code is go to a bank and get a secured credit card. And that will help build credit. You become and working from an authorized user of someone else's credit card to help build credit fast. It's all about. It's much easier to build credit fast if it's not established for a long time versus missing a lot of payments. Unfortunately, credit scores are harder to build and easier to fall. Traditional lenders just look at the number. Unfortunately.
And you wanna go ahead first? I was going just to emphasize saying that to me, credits, it's a huge investment for yourself because that's what builds your trust. Once you have a strong credit, lenders will trust you and can lend you easily compared to someone, even if you have cash. Because I've seen people like, well, I don't need to build credits because I have enough cash. But when it comes to the leveraging, if you don't have good credit score, it's going to be challenging. Even if you ask for $10,000 and you have $100,000. So that's what I usually say to myself, that that's an investment that everyone could focus on.
If you have like 50% down and it's a multi-unit, but you don't have great credit, can you use like a DSCR loan that qualifies based on the income, or does that still look at credit and stuff?
There are still credit restrictions.
Okay.
There are, outside of traditional lending, there are programs. DSCR, debt service coverage ratio, is a great investor program. There are a lot of non-QM, they're called, but basically investor-specific loans. Credit still plays into factor, though. The things that it doesn't count are job history, and it looks at the building as a separate entity. So if the building is cash flowing, you can get qualified just on that. But in fact, it probably has a higher credit score requirement.
You're working out today.
Thank you guys so much for hosting this event. I'm trying to be a first-time home buyer, but you did mention something, Michael. You did mention something about like credit score, job history, and like stable income. Let's say like you have like are all credit score the same? Let's say you've been using a credit card for paying bills, and then does that count the same as if you have like you build your credit score, like maybe paying off a mortgage of a car, let's say something like that, and then according like job history, let's say you're like fresh out of school, right? You have like 1 year or maybe 2 years of job experience. Does school also count as a job history? And yeah, it's and then another question on the loan, like what's a reasonable like long term and interest rate on a loan nowadays? I know it changes a lot, but like what would be like a good estimate for that?
Yeah, lots of great questions.
Life is working today.
We'll start the. I'm sorry. Yeah, we'll start with the credit. We'll start kind of working backwards. So the credit, the rates. Rates are very, very flexible. They're very volatile. Up until when we started the conflict in Iran, things were below 6. Overnight, it almost went up 0.5%. So my advice there, I'd say roughly, to answer your question, it's mid 6s for a conventional loan. For a government loan, FHA, potentially the first-time homebuyer program, you're looking at high 5s. Mid 5s for main state housing. Schooling. Underwriters are looking for, life happens. People understand life. Underwriters are not trying to be undertakers, someone said to me. So they're not trying to destroy deals. What they're trying to do is just check the risk investment for the investors. So schooling can, yes, count towards the history because people have the right to buy a home after school. And I'm sorry, there was a third question there. I just totally forgot it.
reasonable rate.
No, credit score. What's the difference between somebody who gets a credit score based on, like, just say, paying bills, monthly bills?
Oh,
Maybe
yep.
like a call.
Oh, gotcha.
Does the count the same?
Yeah, so build credit scores, and what I can do is I can send Magnifique a really cool sheet, and she can distribute it to you guys about credit score. Credit score, they're looking at how much credit you have, how much your utilization is, so how much of that credit. If you're given $100, try to keep it to 30%. So if you can keep it to 30% of the total amount of credit that you have, creditors really like that. Do you pay your bills on time? If you go buy a pack of gum, whatever it may be, and you keep making the payments, and you show a creditor that you can make those payments, and over time you build that up, that will help build your score. It's just showing over time that you can borrow money and pay it back, or the ability to repay.
Yeah, can I add a little bit about interest rate? So I was going just to add a little bit about the interest rate. As an investor, I usually don't focus much on the interest rate by itself. I focus at what is my monthly payment and the property that you're purchasing, the value. You may find a property that's really attractive, going to add more value, and they're charging you 10% interest. Maybe that property is going to bring you 15 or 20% interest. Why you wouldn't take the 10, even if the regular interest rate is 6? So it depends. Just using the interest rates as the only factor for you to decide whether you should take a loan or not, I would say that's not something I'll do. Look at other things around it, because I've seen most of people just focusing on that. And the other piece is that they can give you a lower interest rate, but your APR, annual percentage rate, becoming higher because of closing fees. So some lenders, they can say, well, I see this borrower is more focusing on interest rate. Let me lower it. And they are charging points so that he can see he's getting lower interest rates. But eventually you're paying higher interest rate. They're just collecting more money up front. So just be careful about that when you're analyzing, to make sure you're not just being narrow on only the interest rate.
Very good.
Thank you for putting this together, and for sharing your knowledge. My name is Jackie. My question is around how do you get to trust a realtor? There are so many realtors around here, and all of them are calling themselves good realtors. How do you get a good one? And the other thing is, maybe what is the impact on your payment history on your credit score? Like, I've been paying well my loans, my credit, my whatever. What is the impact of your history on your credit score? The other thing, what are the do's and don'ts on your way to getting into purchasing an investment property? Do's and don'ts on purchasing your investment property.
So I don't want to say I'm a good realtor, but because now you said it, I can say. I know. Well, I think so. I've had a lot of people.
I didn't get that.
Uh-oh.
Could you try it?
Sorry. So I think I never force anyone. Like, I've had people that have used other realtors, and they come to me when they start having problems because they've closed and they have issues, and now they can't find that good realtor that they called, right? So I think it's about building a relationship. When I have a relationship with a client, I see it like, I tell them like we're married, right? You should be able to trust me that my best interest is for you. So you have to know, if I'm sitting down with you and we're having a conversation and I'm explaining real estate to you, or I'm explaining the possibilities, that you have to see that my best interest is for you. Not that my best interest is the check that I'm going to get at the end of the closing, right? So you could have a relationship. It could be your sister, your brother, your cousin who's a realtor, but you don't have a good relationship with them. That can become volatile during a transaction, because I have to be the person that when you're very stressed and the fire is coming down on the mountain, I have to be like, okay, you stay there. I'm going to put out the fire. I'm your firefighter in this, okay? You stay there. You be calm. I'm going to handle it on my end. When I come back to you, sometimes people don't even know how many things we go through in a transaction, because I won't tell you. I'm fighting with Mike because Mike has told me we have a condition that we haven't met. We're putting out fires behind the scenes. By the time I come to you, I'm going, oh, we're clear to close. So you don't know. So it has to be a person that you know they can put out fires and come to me with solutions. Instead of coming to me with a problem, I have to come to you when I've already figured out, I've already talked the steps out with Mike or Didier or whoever of how to fix it, and then come to you. So it can be really hard because there is a lot of us. And we all say we're the top agent, we're number one, we've closed all these deals. So everything is just based on the relationship that you can build with the person. How much do you trust that they can take care of you?
I needed a deeper answer.
Uh-huh.
Relationship is one thing,
Mm-hmm.
but knowledge.
Mhm.
I wanted to know how knowledgeable a realtor should be, and how much experience a realtor should be to be trusted. Because I've been working. I have 3 realtors, and I see they're good, but they have one has this strength, and the other one does not have this strength. And depending on the deal, you can choose to go with. For example, if I'm buying a house in Bengal,
Mhm.
I would choose you as a realtor because you look like me. I will find a realtor who look like Mike so that they can deal with the realtors who are really who can understand the dynamics of the culture in Bengal, because the community there is not really understanding my English with the accent and whatever. That's those small details that don't count really, but really you don't tick the box when you are looking for a return. So my question, I have been really struggling with finding the right realtor. Because for each case, it's really different. I've seen that many, you know the thing. You went to school, you have experience, but there are the details that goes with each deal that makes me not trust you, that I do trust you. So I wanted you to highlight the key factors, not relationship. Yes, all those 3 realtors I work with are my friends. They are really my friends. I love them. But when they learn how that I'm working with another realtor, they'll be mad at me. But it's okay, I managed that. Make it work.
Yeah.
I have a realtor who's Arabic.
Mm-hmm.
And the Arabic realtor will be kind of a good negotiator. You know Arabic people? They know how to sell. And she can even be aggressive a little bit. But it's fine for me because she's on my side. She's protecting me. And I like her to go into this like Cumberland neighborhood because the Cumberland neighborhood is used with immigrant community. But if I'm buying a house in Farmington and I take her there, she's going to crash. She's going to crash with the realtor. Okay. So I'm trying to share this experience to go beyond the relationship, and also consider things that not really go with only skills, but go with other factors in the business that you don't really count on. Yeah, I will just share my experience.
So
Yeah, I think those are really good points that you raised, and I mean they work well when you're using them and you know what you're looking for. But I want to emphasizing more. My experience was more about relationship, because when I deal with one realtor that I really have a deep relationship with, if I need one of those skills of experience of strategies, he is my point of contact. He would know and say, well, because I've worked with a realtor, but he will tell me, no, I think for this deal, I'm going to refer to someone who knows better than I am. Or I'm going to work with someone else so that we can give you a better deal. So both works. But if you develop a deep relationship with one realtor and you trust him and trust you, and the relationship it must come from both sides. And I've seen realtors. I've worked with the communities, and sometimes I act like a realtor even though I'm not, because I get involved. And I've seen realtor looking just for getting the deal done, and they don't care about whether you're going to get a good deal or not. All they want is like, I'm tired of driving you around showing properties. I want to close as soon as possible. Yeah. And I've seen some of them, like clients, the buyer, trying to say, well, during inspection, these are the lists that I see. I want to negotiate with the seller. And the realtor pushing back before even negotiating and say, no, they're not going to accept them. You should just leave them aside and they will have to close. Or if you don't want, let's go and look for another property. So that's where the relationship and understanding the realtor, as Maggie pointed out, is like a marriage. Once you have a good relationship with that realtor, and that realtor can continue helping you work with other people that you need. But if you can also manage like you did, like 4 that you work with, and they really work well, that's another option too. But the points you raise are really critical. Depending on where you want to purchase the property, you want to know the person who is familiar with that and understand also the property and your goals. That way, I still have a realtor that is a residential that I'm using for commercial. He usually doesn't have any experience in commercial, but he's a good one. He knows good people that I can work with and represent me. So I still have a relationship with him, even if it's outside the scope, but he's still helpful to me. So that's what I would say. Relationship is key. If you become a friend, not just for one single property, but you for a long time. As Maggie said, even after buying, is still the same person you're going to call. Well, the stove doesn't work. Oh, the furnace has some issues that I discovered after I moved in. How can I deal with that? He has to be available for you to help you deal with those issues.
I have a question. So before I decide to choose you as my agent, is there any way I can like meet up with you to interview you to see if you're going, before I sign any contract for you to be my agent? Can we meet up for lunch with any agent that is, and then I can ask you question in depth to see if the relationship or what you're able to basically find the home that I'm looking for, or you're going to be able to basically understand what it is that I need. Is that possible before I sign on that dotted line for you to be my personal agent?
Yeah, 100%, and I recommend it 100%. Please don't sign anything with anyone before meeting them. Even if they have wonderful reviews online. I know agents that will buy reviews. They're not real reviews that they're putting online. So absolutely meet with the agent. Absolutely sit down and make sure that you have that relationship with them. And like you said, I don't know the market in Bangor. So if you came to me and you said, Magnifique, I want to use you, but I want to buy in Bangor. I don't understand the market in Bangor. But I have people that understand the market in Bangor. So I would give you that resource. I would never pretend and say, I know all the agents in Bangor and I can find you and I understand the area and I understand the market, because I don't. And honesty is my first thing. If I don't know something, I promise you I'll tell you that I don't know. But I promise you also that I bet you I can find someone that knows. And I think that's the main thing. If you have a realtor that's honest and they don't know something, but they can figure it out for you or give you someone that can, I think that's a big key thing. Yeah. So I understand what you're saying, where you're like, I wouldn't use you in Bangor. Yeah, don't. Don't. But call me, I'll find you somebody if you want. It's okay. Any other questions? Oh, sorry. I think we were on that main one. Okay, what were the other two? The do's and don'ts of buying an investment. Oh, John would be good on that. Yeah. The do's and don'ts of buying an investment. Especially if it's your first investment or anytime.
Anytime. I think the number one thing is your due diligence. Making sure you do enough due diligence. It's a big. I see people that buy a house in an investment, and right away they're not able to cash flow. There's somebody that's looking to sell me their home in Auburn right now. They said all I have been doing the last 2 3 years is investing money into that home. I haven't cash flow anything. I haven't been able to rent it out. The same property that my brother and I bought, the 4 units in Lewiston. Gentleman bought it as an investment, but he was not able to cash flow out of it. So it became a nightmare for him instead of being an asset that's supposed to be producing income. Means that he now has to take money out of his pockets to invest into that property, not just once, but continuously. The other thing is that not cash flow in the sense that you don't know how to get tenants in. So this is where, again, it's making sure you have the right resources. Are you going to be the one managing the property? So doing your due diligence in all these aspects and making sure that this is a property. One, it cash flows in terms of this is how much the tenants will be paying. Are the current tenants in there? Are they in long leases? What is the situation like? So you don't end up in a situation where Didier is saying where you gotta evict some people. I've bought some properties where I had to evict tenants. The last 3 4 months is just fighting at court. Like, again, in Maine, courts favor them. So you have to be ready for that battle. Do you have the funds? So if you just bought a FHA property and all the money that you had was just for closing and nothing else, and you didn't do all enough due diligence, it becomes a nightmare. But if you do your due diligence well enough, knowing that this is what's going to cash flow, you have somebody, if it's vacant, somebody that can come and fill it up for you quickly. These are all things that I think you need to do due diligence on. One is when you have realtors who are resourceful, realtors, don't underestimate them. They work a lot harder than us. I tell them that I don't like your job so much, right? My brother has been trying to convince me to become a realtor. And I say, no, I don't want to become a realtor. I like my point of being an investor, right? There's so much the realtors do, and they provide a lot of resources to you. And I think also you can go beyond and finding other resources that can help you before even buying the property, making sure that you have all things figured out. The hardest thing is to buy things and say, I'll figure it out later. It becomes a challenge, big challenge.
But I always think, what is the content of due diligence?
Yeah.
Homework.
Yeah.
The context of the diligence is homework. Okay? Homework in terms of maybe the property, you were so excited to get into the property and sign a contract like Rita said earlier. But you even maybe didn't even inspect the property. So you don't know what is ahead, what is to come next. You don't know what it is that I'm going to have to repair in the next couple of months. Maybe the heating system goes down. That's a $10,000-$15,000. So the diligence is doing your homework in terms of doing an inspection, walking it, your numbers, how much rent is it cash flowing now? If I put a little bit of work, so it needs a little bit of work. If I put a little bit of work, can I get extra $200 out of every unit? To make sure that I can actually cash flow, making sure that here is my mortgage, here's the insurance, the diligence again. Here's my mortgage, here's my insurance. Here's going to be for a property manager if I don't want to do property management. Make sure that I can still have some money that is coming in. So that's what I meant when I said due diligence. Mm-hmm.
Yeah. I was going to add also the don'ts by giving you an example of myself going to, multiple times. I have this realtor that hates me a lot, but he's still my friend and we still work together because of my emotions decisions. It's like, I never seen someone who's a risk taker like you. So I've been lucky so far. So and that's what I say, they don't buy a property based on emotions. If you're feeling you're being pushed towards a property you love so much, don't make a decision during that time. So that they don't. Even though you feel like I'm gonna miss. There are 100 people who are fighting over that property. Step back. And this happened. I was lucky that I couldn't get that property. Usually happens on the auctions. I've been in many auctions. Some of them you don't even have right to look at the property. You buy it, the property is over there, the auction is happening here. They tell you there's a tenant, there's an owner there. Once you buy the property, you're gonna deal with the police to evict the owner. And we don't know if he's gonna take the door with him or he's gonna break the bathroom after that. All of those things, whatever you're gonna get, that's what you're going to get. It's as is. And you find you have 35 people. I came with a budget after doing my own due diligence that he explained on a research, look at the property, the year was built, and they put some things that can be unexpected. And then we say, well, our maximum offer will be $300,000. So we went and start bidding with others. We keep going up. We get to 300. I see other people going to 350 and 400. It's like, okay, I'm going to beat them too because they want to buy. That means that property is. And just seeing Marielta walking away is like, you don't stick with what we agreed, you know? So just to tell you that sometimes you can be emotional because I was seeing everyone running, want to go higher. And I start feeling that I need also to keep following the group of people going up, and you can end up buying a very bad deal that can affect you after. So let your emotions settle, and then make the right decision. Every time you see a property, take time, think about it, do your due diligence as he said, and say this is what I think is valuable for this property. Yep.
I think also I gave you maybe from a point of, let's say you're working with a realtor, right? That's different. It's same thing, also a little bit different when you're working with, if you're doing a fix and flip type of investment, because you mentioned investment, it wasn't like specifically, but as an investment side of things, making sure that I've seen a lot of people get involved in trouble is that they buy deals that is not a deal. Right? If you're looking for FHA investment, that's a little bit different than saying, I'm going to buy this property, use a hard money lender, involve a hard money lender because there's a fee there, and then refinance. So there's a lot of different moving parts. So making sure that, I think to add to what he said, is the underwriting things also is involved. So because I'm buying a property, whether I'm offering a lot more or because I really like the property, there are people who say, you know what, I can give this much offer. And again, you're buying out of emotion. Your numbers, knowing that maybe your numbers don't work, depending on which financing that you're using. So another big thing is the financing. How are you getting across with this? What type of financing would you, because that same property may work with a different type of financing, but might not work with a particular financing that you may be going with too. So I just wanted to add the financing part about it. Mm-hmm.
I'll add something quick. And here's a good takeaway and a good thing you can do today is with the due diligence is know your numbers. So what does that mean? And here's a really good tool. You can go online and find a calculator. They're all over the place. Bigger Pockets, you can pay for one. There's a lot of good ones. And then just go online and look at a listing and run those numbers through the calculator. Start to understand what it looks like to do these renovations or to purchase a property. Like start to get familiar with it before you actually find yourself in a situation where you're emotionally trying to buy something, which can create a lot of problems. So that's just a little tidbit that I did many years ago that I found very helpful.
Thank you, Mike. I think another thing to understand is in real estate, no matter where you are, no matter if you're in the US, you're in another country, it's always a risk, right? But they say without risk, there's no reward. So it's you're taking a risk no matter what you're buying, no matter when you're buying it. It's just understanding, doing your due diligence and understanding so that you're lessening your risk. It doesn't mean that the risk is asking with the immigration policies changing, how that affects buying and investing. So I don't know if Didier, you want to add first? No.
They have. Is the short answer. FHA, as of right now, had changed their policies. So, one of the things, depending on the residency status of a borrower, we need to look at different programs, and with different programs come different requirements. So, whether that's a credit score requirement, whether that's a down payment requirement, is really what we need to look at. So, things have changed right now, and I don't know. My crystal ball is broken, so I don't know what is going to happen in the future. But it unfortunately does make it a little more challenging for certain borrowers. But there,
Let's say, would you say a green holder is okay, or like you have examples?
asylum seeker can be very challenging right now.
And Mike, can you explain the FHA? Some people they don't.
Oh, they don't know what FHA is.
Oh yes, so there's great. Sorry, sometimes and forgive me. Sometimes I take advantage. I don't assume. I should assume nothing. Sorry. So let's just say there's basically three big programs: conventional, FHA, and VA. VA is for veterans. Conventional and FHA are basically the two main programs. The biggest difference between them are credit score requirements. So FHA, you can have a little bit lower credit score, and their debt to income ratio. FHA, you can have a higher debt to income ratio. What that is how much money do you have coming in versus how much money do you have going out. For napkin math, if you're trying to see kind of what that payment looks like, 50% for FHA or 55% for FHA. So how much money do you have coming in? Are you making $5,000 a month? That means we can use $2,500 a month, so about 50% of what you have coming in to qualify you for a mortgage. So out of that $2,500, we have to look at all your bills, car payment, student loans, credit cards, plus the future housing payment. So how much money is the housing payment going to be moving forward? This is where a good lender comes in. They will help you understand which one is the best fit for you. If a lender does not go over the different options, you have the right to talk to a couple. Kind of going back to what is a good realtor, a good lender. If the good lender doesn't spend the time to educate you, go over different options, there are a lot of good lenders out there. So I would highly recommend that. Every situation is, what's hard with lending is that everyone's situation is so different. And so it's very hard to paint a big brush. That's where a good lender is important. Having a good conversation to look at the different options. Hopefully, I know it's such a bad answer. I'm sorry, but it's such a hard topic because everyone's situation is so different.
Can I ask you one other question? She mentioned at the beginning about main homes, usually like a 1900, 1800. This building actually, I think, is 1820. That one. So, but I was going to ask the question just so we understand, because I've had people coming to me like, well, my realtor is showing me this house among the price, I mean, my range, but all these houses, they were built in 1900 and some of them 1800. I don't want to even look at them. So can you speak about how a 1800 home sometimes can be a better home than a new construction? Just to educate ourselves, because we used to new homes.
Yeah,
you know?
yeah. I know. We like everything new and fancy and fresh. So construction back then was actually very strong. So that's a lot of what we say when we're looking at our older homes. We're looking at the bones. We're looking at the structure. So my job is to make sure that you're going in the house and it's strong and it's going to last you that 30 years that you have a mortgage on it, right? You want to look if the countertops are fresh. I want to make sure that the roof is not going to collapse next year, So you can see an older home. I say it's different ways to think about it too. Because I think a lot of you came in here, you're thinking about it as an investment opportunity, right? So bones are more important than cosmetics. Cosmetics can be changed anytime. You can paint the walls, you can change the countertops anytime. But if you have the structure and the bones that are strong from an older home, then your investment is actually going to hold longer and you can make whatever cosmetic changes that you want. I don't know if that answers the question. Yeah.
Working with Maggie, that experience. I think
I went to Lewiston, I remember, and I think it was a 3-unit house that I wanted. You know, it looks nice on the outside. It looks really big. If I was to buy that house, I'm going to post it. I'm going to look like a boss. That's the first mindset. But now I'm telling Maggie, I'm like, okay, I like this house. But now we have to dissect it. And what does that mean? Now she has to, as my as my agent, she has to look at the paperwork. How long has when was the last time they did the roof? How's the basement? So those are the most important. The foundation, like you were saying, is very important because you can get stuck just because the house looks good on the outside doesn't mean that it can stand. Maybe within 2 years, it can tumble and fall. So that's one of the biggest thing. And then I think with me, it was more so, again, the roof was just, I can't, you know what I mean? Roof is very important because if you get stuck and you buy the house as is, and this is where doing an inspection is very important. Don't rush and bypass that inspection because it can cost you a lot of money, hundreds of thousands of dollars to fix it, even though you signed up for a $400,000 mortgage. So now on top of that, that's $500,000, and it's like it's a stress. You're losing money versus getting money from that. But again, building that relationship with your agent is very important because I remember the house that I finally settled on. Maggie knows me so well that I was running late to that listing and I was 30 minutes late. I told her, African time. I told her I'm going to be there in 5 minutes. 20 minutes later, I was there. But she already went in and saw the house because of our relationship and her knowing what I like, my do's and my don'ts. She was able to be like, you know what? You're going to love this house. I'm like, are you sure? She's like, yes, you're going to love it. So I walk in there and I'm like, ooh, right away, compared to Lewiston, guys, your environment really matters. This one, my property that I'm looking at is in Biddeford. So I started looking at the ceiling because the last property I had, the ceiling was horrible. I'm very into the ceiling. I started looking at the flooring. I'm like, oh, thank God the flooring is together. But again, we went back to what I didn't like in Lewiston, which was the roofing, which was the basement. So you have to ask these questions so that you're not stuck in a property that you're going to regret and you're going to have to be forced to basically sell. You know what I mean? You're just not going to be happy about it. So that's about it. And then just to add about credit score real quick, I think talking to people is very important. I remember having a low credit score. 2 things. One, I was building it and I had a car payment. After I was done with my car payment, unfortunately, my credit score went lower. Instead of it going higher, it dropped. And I went and asked my bank, I'm like, why is that? They said, because I didn't have anything to balance it out. So that's something everyone needs to keep in mind as far as credit score. And then the second thing is, that I spoke with, I think I had a Jewish friend of mine, and I was like, what's your credit score? Talk to people. She said hers was 800. I was like, whoa, how did you get there? And her knowledge, telling me her way of getting there. She was like, you know what? You have your minimum that you have to pay every month. They tell you 35 or 38. That's not true. Your minimum is there, but also keep in mind that you're not cut off from making payments every week. If you have that extra money, you do Uber, make that $10 to $20. You're sitting there going through your phone, going on Facebook, Instagram, whatever. You have money, transfer it to that credit amount that you owe. It literally will boost it because credit score is all about how much activities. Are you focused on it? Is there any movement going on in there? That's how I look at credit. Thank you.
I know my new panelist.
Yeah. I want to ask John again on the same, going cycle back on the question about homes and how old they are. And I know you do remodeling. Can you remodel a 1900 homes to value more than a brand new construction today?
Absolutely. You can remodel anything, right? It just depends on how much money you're willing to put in there. There are homes where if you buy it, I once bought a home and I didn't really pay too much attention to the foundations, and I don't think it was that old either. But coming to, I think it was close to the time that we were listing it on the market, we realized that the one side of the foundation was so bad. And when you start bringing quotes in there, people to get quotes, you're looking at $15,000 $20,000. And I mean, we make these mistakes when you see the home, how nice it looks, and you forget about the smallest details of, doing that part of the homework. But I can't say that home was so old. It wasn't too old. It was just, it was probably in the 1950s. But and then again, you have homes that are built in the 1800s that are so solid. As long as cosmetic work, you can always, like what you said earlier, if it's to do with drywall and all these things, you can always make the inside look beautiful. And so I think at the end of the day, it's not so much about a year, but doing your inspections, making sure that, like she said earlier too, making sure that it's in a solid foundation, and that's something that you don't need to put so much more money into once you buy it. So I think that anything can be renovated for sure. Mm-hmm.
100%. And I'll speak a little bit with Rita's situation. This came up with the due diligence question. So we were under contract with that property, and they had put in the listing that the roof was 2023. So once we went through inspections, and it was so high, you can barely see. Sometimes you can tell if a roof is older. So it was so big, you could barely see it. Once we went through inspections, we realized that the roof was not 2023. The roof was 18 something, and they had put like 5 patches on 2023 and then decided to call it 2023. So thank God for inspection. So I always recommend, please do an inspection and get an inspector that has the drone. Get a drone, because you have a question? Yes. Oh, yeah.
Sounds good for efficiency. Buy a lot of that.
100%. 100%. And especially in Maine, I mean, our weather that we get a lot of snow. If people are buying during dry season, sometimes you could buy property now, and then when it starts snowing and stuff, you start seeing leaking through your windows, and you're like, what's going on? That's why it's really important to really do your homework, have an inspector, have people that you can trust, that know what you don't know. Because you don't have to know everything, but at least if you know people that don't know what you know, then I think that helps a lot. I think you had a question? Yeah. The mic. It's okay? Okay. Go ahead. No,
You guys received some really good questions. I apologize in advance for the basic questions you're about to hear.
No. We love the questions. That's the whole point.
So let's say I have two questions. The first one is for beginner home buyer, right? Like if you pair up with the person with multiple properties, the question is, do you still qualify for like first home buyers benefits or program? For example, I was able to do some homework and research, and first gen programs came out that's offered by Prosperity Maine, which helps with closing costs and other fees related to closing the deal. And the second question is it's a hypothetical situation, right? So let's say you're helping out a client, right? They went through the whole buying process, and now they're on the part where they submitted a final offer, right? Mm-hmm. They submitted a final offer, and it was declined by the seller or the seller representatives, right? What's how would you advise that client to get over that stage where they don't have additional funds to send to the seller or the seller representatives? Is there any other incentives you advise them to put in order to sweeten the deal, so that the seller favors you over other people? They say they're putting on additional $10,000, $20,000. Like, what other things besides funds can you advise?
Those are good questions. Very good.
I'll speak to the first one.
I'm glad you came.
Yeah. So the Maine State Housing is the most common first-time home buyer program. It has phenomenal programs, and the main one is the $5,000 grant. Then there's also a first generation, which is a $10,000 grant. Amazing programs. they do not allow for non-first-time home buying cosigners. So if say like you're a first-time home buyer and your parent is going to cosign with you, that makes you ineligible for the Maine State Housing Grant. Something with the Maine State Housing Grants too that they do not tell people is that you still need to. It's a grant, it's not a loan, and you still need to qualify for it. So because it's a grant, they make it a little bit more challenging to qualify for. Have a good lender that can walk you through that process, because Maine State Housing's position basically says we're not going to talk about any lender, so they don't talk about that piece of it. But it is if you don't qualify, and they make it a little bit harder, higher credit score, lower debt to income to qualify. They make it a little bit harder. It is a great program. We are qualified, and is a great program. Yeah, Maine State Housing, MSHA.
Got some credits that I maybe share with everyone. I did the same program.
Oh, awesome. Awesome. And I'll let Magnifique speak to strategies.
Yes.
On the lending side, I'll say one quick thing. Having a good lender that can close quick. Sellers want to close with as little red tape, as fast, as easy as possible.
Mm-hmm.
So it's very much a team, everyone involved. Having a good lender, and that's why lenders that pre-approve you, make sure if you don't send your bank statements to a lender and they pre-approve you, that's a red flag.
Mm-hmm.
So make sure if they're not asking for the documents, if they just say, oh, you're pre-approved, huge red flag. That just is going to lead to problems down the road.
I wanted to share. It was in 2023. I had 6 months work experience in the US, and I met the CEO of Men's Housing, and he told me, just go on the website and look at the program. And I went on the website, found a realtor called Andy. I called him. Can you help? He said, are you pre-qualified? No. I give you somebody to pre-qualify you. He sent me to Guild Mortgage. That's the lender who works with Maine State Housing. And I worked with somebody called Craig. And I never seen him. We did online, like we never did any Zoom call. It was email. And after some time, I was pre-approved, but they used my international experience. I used to work for TransUnion, and I requested TransUnion to give me a letter of reference, a reference letter that I worked for them. They have their office here, but I used to work in their office back in Africa. And they wrote me a letter that I worked with them, and I gave it to Guild Mortgage. Then they pre-qualified me, and I started working with that lender. That lender told me to do first homeowner training, and after the training, I got 5,000 credit, and they asked me to do first generational, whatever, like in my family, I'm the first person to get a home mortgage. I did the training, I got 5,000. And I was pre-qualified. I only have 14,000 on my account. So I managed to buy a home worth 300,000 with 14. My own money that I brought in was $14,000. But I got that credit of 10,000. And it took me like a month to go through. It was so fast and so prompt. Nothing really much. It was, I think the time I invested in was more of doing those programs. Avesta Housing provide those programs. When you go to the Avesta or whatever, you find them and you do the programs, and you send the certification to the lender, and then they give you the 5K. So I got 10,000 K in the closing cost. Yeah. Huh? 10,000. I got 10,000 credit. My total my down payment was 24,000, but I only brought 14,000 into yeah.
That program, because I'm also going through it now.
But I did FHA.
First time home buyer.
I believe single, if you're buying like, let's say it's a single unit, you get 5,000. If you get in unit, you get 8,000, and if the 3 unit, you get 11,000. So that's for the first time home buyer right now. And then the financial literacy one, you get 10,000. You take the class and all that. But I think with the first time home buyer, you have to take the first time home buyer class and the landlord, because they need to, you have to learn if you're gonna be a landlord when you have those multi-units, so things like the multi-units.
So you say like the 2 units, it's
2 units, 8,000,
8,000.
and then 3 units, it's 11,000.
And then the 1 unit is
5.
thank you.
Thank you, Miss Rita. And thank you, Mama. So to the second question you had about negotiating power, so I would say even before you're putting in an offer, your realtor should be communicating with the listing side and asking them what's important to your seller. Because sometimes a seller will take less if the conditions are right. So you have to just communicate and say, because if I can close, if someone is offering you $500,000 on your home, but maybe you'll take $450 if I can close in 15 days. You know what I mean? So what's important? Are you moving? Did you get a job? Why are you selling? So it's kind of understanding that, but still put an inspection. I know a lot of people will say, okay, let's just take out the inspection and then they'll take it. And it's just a very big risk, right? So it's just understand why the seller is selling. Because once you understand why they're selling, it makes it easier for you to focus on their needs and then how you can present an offer that they would accept. Yeah. I think it's past 2. Do we have any other questions? And then we can wrap up and then maybe you guys can have some food.
Earlier the guy asked, like, what is the process of buying your second or third house? Like, as far as like, do you have to put that 20%?
That's on you, Mike.
Mike.
Yeah, traditional investment property requires 25% down. 25.
She said, never mind.
Wow.
He said traditional.
Traditionally, yeah. Now there are here's strategy, right? There's different strategies. You can always look at a second home. The difference between a second home and an investment property in the lending space is that in an investment property, we can use some of that money to help you qualify. For a second home, we don't use any of the rental income to help you qualify. So say you want to buy a house on Sebago Lake and Airbnb it. We would typically count that as if it doesn't have any history, as a second home. But you can put a lot less down, but we can't use any rental income to help you qualify. Second home cannot be a multi-unit. If you're looking for a multi-unit, so 2 through 4, 25% down. That's traditionally. There are some lenders that can go 20%. Most will not go below 20%. Why? It's because it's higher risk. You're welcome.
Thank you. I think I'm working out now. Why?
I'm curious to know the path towards becoming a developer.
Go ahead.
My question is that, what is the path towards becoming a developer?
A developer.
Yeah.
What do you want to develop?
What is the path towards becoming a developer?
What kind of developer? When you say developer in your mind, you say developer.
Yeah, like you somebody okay, the scope, like you buy a land, develop the land, and build houses for sale. Yeah.
Like building a subdivision.
I'm not really going to do that, but I'm thinking how does it? I'm just curious. Thank you.
How do you get there?
How do you get there? I know somebody who is doing that, and she's having trouble really getting financing. So I don't know where she got there, but I'm curious on how to get there.
That's a really good question. I think everybody has, yeah. Everybody has some experience on it.
Yeah. So being a developer, you have to have, as we talked about, all the things that we have: credibility, have probably investors on your side that you can go access the funds easily that you need. Because again, to go to the traditional lending requires experience. They want to see if you've done that before, to be able to assess the risks of what you're taking, because it involves a lot. You buy land, you go through the process of permitting that, go through the planning board, coming up, working with the civil engineers. They might be needed the driveway, the road in that space, the utilities that need to be brought in, and the type of residential housing that you're going to build in. So there's a lot of involvement that goes through the process. It's something that's doable, that you can do, but you have to have investors. You have to have engineers on your side that you know you can work with. Also legal side, because there is some legal papers involved. And if you cover that, and you know you have good people that you trust and you can get access to the financing, it's doable. And then it comes to the point of you assessing the costs, and when you finish, how you're gonna sell it. So that's how the process is. There is no licensing for you to be a developer. Yeah, I mean, I've done that, small developments, but there is no licensing requirements. It's you kind of working as someone who understands the constructions. If you have a builder too, builder is another person you need to have. So you kind of understanding, and most of the people that I've seen or myself get to the developing side of the business is to start even understanding the actual constructions, the process of even one house. Can you buy a land yourself, go through the process of building it? Does not mean you are the one who's going to build it, but you have all the contractors that you need, and you know the process. And before that, you probably need to start with just remodeling, because that gives you a sense of understanding. When we see a structure like this, we need to understand where does it start, from down up. So it's a process, it's a learning process, but it's something that you can go through it and become a developer, as you said. I've gone one time. There was a main set housing program that had the financing for developing some affordable housing that I went through initially, and my experience was not enough for them to trust me as a developer. So I have to bring in someone else who has done multiple developments to be able to access that financing. So the big piece is financing first, but if you have the capital and you have other people that you can hire, it's something that is doable.
Wow. I think he answered it all. You know, if you want to get anywhere, I think definitely one is partnership. Sometimes we have this mindset that we need to own everything, or we want all the profits for ourselves, right? So it's a bad mindset. I tell people, if you're going to do wholesaling and things like that, that's simple. You know, as far as developing and renovating and buying those kind of things, partner with somebody in your first deal, and then they'll teach you, they'll walk with you, and as the what he says, you know, as you partner with somebody because of the experience that they have, it'll also teach you everything that you need down the road. So I think the first thing is find somebody who is doing it, himself. I know Mike does some development as well. I'm as well as doing some development, small development. I've partnered with some other people. My experience has been more in fix and flip, renovating, which is actually more work than developing. Because developing, you have a process. You're
Thank you. Another question?
Maybe last one.
Yeah. No, go ahead. It's you.
Last one. So let's say a mortgage lender or a loan officer purchasing with like an initial cost worksheet and a loan estimate, right?
Mhm.
There's so many fees under there, so many costs, so many itemized things on there. How do you know you're getting the best price, and how do you know which fees or costs?
It's a great question.
Also, how do you know which ones are essential, which ones are to remove, and which ones are not?
Yeah, I'll give you two pieces of advice. The first one is you have the right as a consumer to basically talk to multiple lenders. So I would talk to multiple lenders and compare quotes. If you look on page 2 in section A, it'll basically say the lender fee, which it'll probably be $2,000 or less. And that's where lenders will start adding in points. That's where lenders will charge you $5,000, whatever amount of money, to give you a lower rate. You may not even know it. Have a lender you can trust to share that with. Put lenders against each other. I hate to say it. Put lenders against each other because it can be very competitive. And the ones that are honest will show you where to look. And the ones that aren't, you'll figure out quickly.
I just want to add that I have both copies from one of my failed attempts to close the deal. But yeah, if you have some time,
Happy to.
today or some other time,
Happy to.
I'll really appreciate it.
Happy to. Thank you.
Thank you. Okay, guys, I think we're gonna wrap up. I just want to say thank you for everyone that came out. You know, it's like Didier said, and everybody's been saying, when you're in real estate and you love it, you want to share what you know. You want everybody else to be as successful. You want everyone else to be as happy and investing and be more knowledgeable. So I really appreciate you guys taking the time to come out and kind of learn a little bit more or share some of your own insights like you guys did on your experiences and kind of just network and help, you know, hopefully we've shared some knowledge that maybe some of you didn't know before and you gain from this and you'll gain some food because there's food here. But yeah, we really appreciate everybody coming out. We'll try to do more of these, you know. We usually try to do it when the season is slow and I'm not as busy, but I can see summer, you know, people are excited and they buy so fast and they do take those risks because they see someone else buying a house and they're like, now I want to buy a house, and they don't know these things. So we'll definitely be doing more like these kind of discussions and panels where we have people here that you guys can network with and ask questions and feel free and feel comfortable. So thank you.